On June 12th, one man became history's first trillionaire. Millions of Americans helped pay for it, automatically. Wall Street's own analysts say the stock is worth less than half. Let's take a closer look. June 12th, 2026, just before noon in Times Square. The NASDAQ bell rings, the confetti falls, and a ticker called SPCX starts trading at $150 a share. By the close, it's $161. In one afternoon, SpaceX becomes a $2 trillion public company. $75 billion raised, the biggest IPO in the history of markets. And Elon Musk becomes the first trillionaire the world has ever seen. Now, I don't begrudge a man his rocket money. But while everybody was watching the confetti, I was reading the paperwork, and buried in it are three numbers that matter a whole lot more than the stock price: 63, 82, and 30. 63 is what one of Wall Street's most respected research firms says a share of SpaceX is actually worth. 82 is the percentage of voting control one man keeps after selling you the stock. And 30 is the percent of this IPO aimed, deliberately, at regular folks like you. Here's the part nobody prints on a banner. Even if you never clicked buy, there's a good chance this stock is headed into your 401k anyway, automatically. So today, we're laying the biggest IPO in history on the table and opening it up. Start with what SpaceX actually earns. In 2025, the whole operation, rockets, satellites, AI, all of it, brought in $18.7 billion in revenue and lost almost $5 billion doing it. At the IPO valuation of $1.77 trillion, that prices the company at roughly 94 times its annual sales. You've seen this before. You just didn't know what you were looking at. At the very top of the dot-com bubble, Cisco, the poster child of that mania, peaked around 38 times sales. It then fell nearly 90%. It needed about a quarter century to climb back. SpaceX went public at more than double Cisco's peak. That's not a premium, that's a dare. And this is where it gets interesting. Where did that number even come from? Follow the timeline. Through 2025, Musk's AI startup, xAI, was raising money at valuations reported around $75 to $80 billion. In February 2026, SpaceX absorbed xAI in an all-stock merger, valuing the combined company at $1.25 trillion. xAI's piece was marked at roughly $250 billion. Same company. The number just grew. 4 months later, the IPO asked the public for $1.77 trillion, another $500 billion on top. Wall Street's own homework says otherwise. CFRA opened coverage with a sell rating and a $115 target. Morningstar pegged fair value at $63 a share, while the stock traded at $161. When price and value disagree by more than half, markets have a habit of grading that homework late. Now suppose you buy anyway. What exactly do you own? A share, but barely a say. SpaceX went public with two classes of stock. The Class B shares insiders hold carry 10 times the votes of the Class A shares sold to you. After the offering, Elon Musk controls over 82% of the vote. You can own the stock. You cannot outvote the man. One governance expert told the Wall Street Journal, the structure closes off nearly every avenue for shareholders to have influence. 2 days before the debut, Senator Elizabeth Warren sent the SEC a 12-page letter asking regulators to pump the brakes. She cited the valuation, the governance, and whether index funds could protect the investors forced to hold it. The bell rang on schedule anyway. This is the part they leave out of the brochure. A SpaceX board member's private equity firm leases the company's AI arm over $20 billion worth of equipment. Tesla owns about 19 million SpaceX shares. And the same accounting firm audits both Tesla and SpaceX, two companies that trade assets, people, and contracts constantly, all of it legal. But history keeps one uncomfortable receipt on this subject. The last time America watched an audit relationship sit that close to that much intertwined money, the client was Enron. Roughly $74 billion in shareholder value gone, along with thousands of jobs in the audit firm itself. I'm not saying SpaceX is Enron. I'm saying complexity is where surprises like to hide. Now here's where most people stop reading and start losing money. Most IPOs hand regular investors 5, maybe 10% of the shares. SpaceX reserved roughly 30% for retail through Robinhood, Fidelity, Schwab, Sophie, E-Trade. Before the first trade, everyday investors placed over $100 billion in orders. Total demand hit roughly $250 billion, 4 times the shares available. The last time Americans lined up like that for something they hadn't seen working, it was a Black Friday doorbuster. But the retail line is the small pipe. The big pipe runs on autopilot. 3 firms, Vanguard, BlackRock, and State Street, steer roughly 3 out of every $4 in U.S. ETFs. Today, about 1 in 4 shares of a typical S&P 500 company sits inside a passive index fund. A decade ago, it was closer to 1 in 14, and an index fund doesn't deliberate. It's a machine that buys whatever gets stocked on the shelf. When SPCX enters the major indexes, some analysts estimate $250 to $300 billion flows in during the first year alone. And the Russell rebalance was circling within 2 weeks of the debut. Roughly 60 million Americans hold target date or total market funds. Most will own SpaceX without ever deciding to. The guardrails used to be sturdier. A new stock once needed a full year of public trading before joining the big indexes. Time for analysts and short sellers to kick the tires. That rule's been bent so often for mega listings, it's more of a suggestion now. And all of this lands on one crowded index. A handful of tech giants already make up a bigger slice than tech did at the dot-com peak. Stay with me, because this next part matters. What did everybody actually buy? 3 businesses stapled together. And the first one is genuinely remarkable. Starlink pulled in $11.4 billion in 2025, 61% of all revenue. It passed 10 million customers by March 2026, double 15 months earlier. Rockets that land themselves, launching more than once a week. Nobody on Earth does this better. But hardware ages fast up there. Of the roughly 11,600 Starlinks launched, tracking data shows more than 1,500 have already come down. Some retired on schedule. Plenty were forced out early by thruster trouble and fuel leaks the company has acknowledged in federal filings. Every early death means lost subscription money, plus a replacement launch that doesn't grow the network. And trackers logged a string of uncomfortably close passes in 2025. The nightmare scenario is a collision cascade that salts low orbit with debris for a generation. Second business, defense. For 60 years, the Pentagon's rule was simple: never depend on one supplier. Today, SpaceX launches most U.S. national security satellites. Its old rival ULA flies a handful of missions yearly. And Boeing's capsule left 2 astronauts stranded until a SpaceX Dragon brought them home. When a town has one plumber, the plumber sets the price. Third, the AI and social media side. That's where the money burns. X still carries the interest on its $13 billion buyout debt. North of $1 billion a year, about $3 million a day. The AI segment lost billions in 2025. Capital spending hit $10.1 billion in a single quarter, most of it on AI. Guess which business writes the checks? Starlink. Put it back together. SpaceX is a real company doing things nobody else can do. It's attached to a price its own analysts can't justify, and a vote you'll never get to cast. And it's wired into a machine that buys on autopilot. with your retirement money. 63. The gap between price and homework. 82. The vote you don't have. 30. How directly this thing was aimed at Main Street. I'm not telling you to buy it or dump it. I'm telling you to do the one thing the autopilot never will. Look, once a year, open your 401k, click into each fund, and read the top holdings. Know how much of your future is riding on any one name. Because concentration doesn't feel risky right up until the day it is. The folks who got hurt in 2000 didn't lose because they owned tech. They lost because they owned nothing else and never checked. The biggest IPO in history didn't need your signature. Your attention, though. That part's still yours to give. I'm Warren Buffett, and this has been Invest Anatomy. Remember, folks, on Wall Street, the confetti's always free. It's the ticker tape that costs you.